Thank you so much. Really appreciate it. So thanks everybody for joining today. Power Matrix's webinar here on COVID funding and regulatory compliance. We are very excited to be bringing you guys this content weekly. So new news this week. We're really excited to announce this. We hope that you follow us on both social media platforms. We have decided to co-brand this future webinar series. Earlier this week, after discussing the different topics within the webinar series that both TEPA and Power Matrix were putting on, we've decided to work together. Honestly speaking, working together, I think, is in this industry is going to be a huge part of how we overcome this pandemic, and we emerge from the pandemic stronger than we were before. Power Matrix has been a huge supporter of TEPA's efforts over the past decade to help educate the retail energy community on these energy initiatives and advocate legislative plans. That's what TEPA's mission statement is, and we've supported that from the beginning. And I think TEPA supported Power Matrix's growth that much that they actually announced us as Affiliate of the Year this year, and we're very proud of that accomplishment here at Power Matrix. So this co-branded webinar series, we will be continuing to give you guys more content each and every week here throughout this crisis. More to come here shortly. As I quickly continue on here, many of you know who Power Matrix is. You know exactly what we are up to here, but some of you are engaging with us for the first time. So our mission statement, Power Matrix focuses solely on connecting people through technology to increase trust in retail energy markets. And so to us, connecting people through technology doesn't mean just through our software as a service products and selling people technology solutions like Sparkplug, Exchange, and Propeller. As we started to think 3 weeks ago, as this pandemic started, how we could create or how we could make personally a meaningful contribution to how COVID-19 was going to impact retail energy, we decided to use our network of customers, including 100 plus ABCs, and retail energy suppliers, as we can call customers of ours, and also our prospecting mailing list to connect people through technology. And in this case, through technology is this webinar series, right? It's not about selling products, it's about delivering you guys great content. So we're really excited to partner with TEPA through this mission. And having said that, we have some cool things coming up already. Next week, we are going to be doing a supplier panel. We have a great list of folks here, including Jeff Schoaf, President of Hudson Energy, Jeff Levin, CEO of Great American Gas and Electric, and Shawnee McBride, VP of Sales and Operations from Direct Energy. And we'll be talking about a lot of hard-hitting questions that the brokers have had, as well as what the suppliers want to talk to the brokers about, so that we can continue this journey together in this uncharted territory, uncharted world. So Thursdays at 9:30. We are going to be continuing this webinar series. Please direct message me, send me topics, ideas. What do you want to know? We're here to help. So definitely lined up supplier strategies for next week. Got a couple other additional broker panels that we're going to be having. But if there's anything you want to know about, do not hesitate to ask. We're here for you. All right, next up, make sure you fill out the polls. Right now, make sure you're at the bottom of your screen doing this as I speak. So at the bottom of your screen, right underneath this presentation, you have this poll screen. There are different questions here, as you can see. There's actually 3. So we do hope that you scroll down, fill out all 3 questions on the polls. It is going to only help us deliver you better content during this webinar. And as of right now, just so you guys all know, we have over 100 people attending this webinar as we speak, 200 plus registered. So really glad that the community is engaging in this content. So make sure to fill out those polls. All right, today we're going to be covering a couple of things. Intro is what we just went over. US SBA funding for brokers. My dear friend, business partner, and general just expert at many things, Nate Richards, is going to be presenting on that. Regulatory compliance for brokers. Madeline Cuchero, we'll talk about that in a second, and then we'll do Q&A and a wrap up to end this. As we look at the changes due to COVID-19 and just some of these, questions, these are comments directly, that we've pulled from suppliers and brokers, and so much is going on and so much is changing in our world, right? Suppliers have a lot of nervousness around, and rightfully so, about capacity costs and other things. Also, you have all these regulatory bodies banning face-to-face solicitation, and the suppliers are stepping in to say, we have to support that as an industry. And that's changing the way we do business. On the broker side, I feel like a lot of folks that were using email and Excel feel a little bit unprepared for this new world, and we're hearing it and seeing that from brokers as well. So again, is exactly why we're putting on this webinar series. It's to bring together people, discuss these issues, have panels, great conversations and great discussions. So, Nate, anything else you want to add here?
I would just say, here we have a quote from a customer who actually just started implementing, and unfortunately, he was a small broker and just was not prepared to go digital. Unfortunately, his team, he just started implementing and felt like, wow, I don't know how I'm going to get my team through this transition to working remote, to working, not out of their inbox and spreadsheets. And, we were disappointed to see that, but it's just so telling to hear it, from the horse's mouth about how many brokers are really living in the 20th century. It's kind of funny for me as a 41-year-old to hear living in the 20th century as sort of like an old school thing. But yeah, I mean, technology's come so far, and there are better ways of doing things now that really make a difference.
Absolutely. Thanks for those comments. Now that we just have a couple more people joining, just to kind of recap here before I get into the next part of this presentation, just want to share that the polls are at the bottom of your screen here. If you're looking at our screen now, all participants are muted in this. We do want you guys to interact with us, ask questions. At the bottom of the screen, you'll see questions, polls. We won't be doing any offers. Polls, make sure you fill out right now. See, a lot of people have filled those out, over half of the attendees, so please continue to fill those out. Questions, that's where you're going to be able to launch questions, and we will answer them all as we can as we moderate this panel. So just for those that have joined late, wanted to do the little blocking and tackling before we start. And so as I move through these slides, our speakers today, as I mentioned, our CFO, Nate Richards, CFO of Power Matrix, Madeline Kuchera, President of EarthEtch, and myself, Jason Beck, your humble moderator. Unfortunately, due to COVID-19, postponed due to internet connectivity issues. So unfortunate that we won't have Madeline joining us today live. She would make this panelist a little bit prettier, besides Nate and I, so we miss her there. But I want to share with you guys that after this content, I'm sorry for sharing that. Oops. This is sharing the content just really quickly here. Madeline has put together a fantastic slide deck here of all of the different PUC regulatory updates of New York and New Jersey, and there's 34 slides here of information. And I'm just going to stop there and just let you know that we are going to be making those presentations available to everybody after this presentation. So you'll feel free, sorry that we won't be able to cover that content today, but more time for Nate to answer all your questions about the COVID funding. And with that, I am going to stop my screen share and ask that Nate take over the presentation of the slides and take us forward, and I will moderate with questions.
Okay, I'm going to attempt to do this here, share my screen. Okay.
And then we'll just make this big.
Jason, you'll let me know that that's coming through.
It is, yep, coming through well. Slides are on the screen.
Okay.
Rendering issue, but please continue.
Okay, great. Well, thanks everybody. I just wanted to first off just apologize in advance. I normally don't use a lot of text in my slides and try to really allow the presentation to be the content and the slides really being visual cues. Unfortunately, the stated goal of this slide deck is to kind of take an 800+ page bill and condense it down to what really matters, and even more distilled than that, what's really going to affect our broker and supplier communities. And so there's a lot of text here. So I'm just apologizing in advance for the lack of PowerPoint Ninja skills here. Okay, just a couple of things to level set. Common acronyms here. There's the CARES Act. Congress, when they pass acts, they like to give them fun acronyms that make them easier to market. Here we have the Coronavirus Aid, Relief, and Economic Security Act. This is the act that instituted much of the changes. You'll hear it referred to as the $2.3 trillion relief package that was passed. That's really what they're describing. The second is EIDL. This is the Emergency Injury Disaster Loan, also called an EIDL. This is a loan that's provided by the Small Business Administration, the SBA. They're our fourth acronym. Which is typically for things like hurricane disaster recovery. And I'm going to talk about what's happened is because of the national disaster, they've extended this EIDL program. And we'll talk about some of the options that are new under that program and kind of how it works together. And then last thing here is this North American Industry Classification System, NAICS or NAIC. That's just a way to kind of have canonical industry codes so the government can say, if you're in this industry or if you're in that industry, you qualify or don't, and that sort of thing. Okay, quick summary on the CARES Act. This passed very recently, obviously over $2 trillion out there in what the key things that really affect our community are, number one, tax relief. So there are some sort of tax advantages. I'm going to go through those in a few moments. There's an expansion of the 7A loan program. This is another SBA lending facility. And this is probably one of the juiciest parts of what passed and really what I'm going to provide the most insight into today. There's $349 billion allocated to this loan program, and it's being called the Payroll Protection Program, the PPP. So that's really what we're going to talk about, the PPP, which is an extension of the existing 7A loan program that was created under the CARES Act. And then the third kind of big takeaway point is this extension of the EIDL program through the Federal Disaster Declaration. And that's, again, another lending facility that the SBA has that works a little bit differently. And we're going to go through what those subtleties are. The last thing to know is that although this act was passed by Congress, a lot of the vague ideas, notions embraced by Congress, when it hits the ground, they have to implement them. They need some interpretation and kind of refining. And so the initial kind of major refinement came about a week later on April 3rd, called the IFR interim final rule. I love how the federal government, the final decision is the interim final rule. And throughout the presentation, where there are clarifications for that came from the IFR versus the original program, I've color coded those in green just so you'll know if you're familiar with the original legislation. There might be some new information there for you to kind of key in on. And then the other thing I've done is try to highlight in orange things that are particularly relevant. There are some other things that maybe apply to certain players in our industry, but really the orange stuff is really the meat that really everyone, if you're not participating or not considering it, you really should be. And that's really what I've colored in orange here for you. Okay, we're going to start with the tax relief. The first thing is there's a employee retention credit for retaining employees and continuing to keep them on the payroll. Again, the government's goal here is keeping unemployment from just going astronomical. We saw even today another million, or I don't know what the exact number was, because right as we were starting the webinar, they were announcing the new unemployment. But that's just in this month, and there was another couple million last month. So of jobs lost, meaning new applicants for unemployment. And the federal government's goal is, rather than paying all these people on unemployment, is to keep them on employer payrolls, and to build confidence and pay them through their employer. And this is what we're going to see as a theme throughout this bill, and how it applies to small businesses like what we have here in our industry. Second kind of key point here that might apply to some. Jason's letting me know that my slides are not coming clearly. Let me just check here. I'm just going to pause. Jason just texted me.
Unclear, but I'm happy to take over a screen share and then just let me know when to click on the next slides. Would that work?
I was getting pixelated slides when you shared as well. I mean, if they're just a little pixelated, I think that's just.
No,
are they
just
illegible, or are they just
saying that it's
pixelated a little
absolutely
bit?
fine to them? So thanks, Laura, for sharing that. So please continue. My bad. Thanks. Appreciate it.
Okay. Okay. Cool. Yeah, please, and anybody out there, because it's a webinar versus a Zoom where anyone can talk, please use that question thing to stop us if we miss something or you want us to go back. And I actually am looking at my own slides here while I'm talking rather than looking at the questions. So Jason, just, I'm going to count on you to chime in as those questions come up. Okay, just jumping back in here. So another thing out there is this deferral of certain employment taxes. So this is something to, if you make your own payroll deposits, to take a look at. You might be able to defer some of your employment taxes. This doesn't mean you don't owe them. This just means you can pay them late without penalty, and you can actually pay them as much as into next year and the year after. So that's something to take a look at. If you're using a payroll company, we use a payroll company just to simplify our own payroll. And, that's something you're going to want to bring up with your payroll company and see if that's an option that you'd like to pursue through them, or if they're going to open that up to you as they are processing your payroll and payroll tax deposits. Another thing is that changes to net operating loss rules. Again, this is one of those that's not going to pertain to everyone, but there were some rules about carry forward of net operating losses. This might exist more in the supplier world, maybe. What I would suggest here is that most people follow up with their CPA. Maybe I should have given an acknowledgement that I'm neither CPA nor attorney. I'm just an entrepreneur. And my goal here is to try and share with you the entrepreneur's take here versus the CPA or attorney's take. So definitely follow up your CPA and see if there's something there for you to look at. If you've had an operating loss in prior tax years, you may have some new options available to you to leverage that net operating loss. If you file alt-min, alternative minimum tax, another thing to take a look at if you have credits there. Hopefully we're not importing any distilled spirits, but if you are and you make hand sanitizer, you may be able to get some credits for that import tax. A lot of businesses have been pivoting, so I thought I would leave that one in there mainly for comic relief. If you've pivoted to make hand sanitizer rather than brokering or selling electricity, natural gas, God bless you. It seems to be the new gold. And hey, those distilled spirits that you've been processing, you might be able to get some tax credits on that. Okay, so now kind of back to the serious program here. Let's talk about kind of the main enchilada here in this CARES Act, and that's the Paycheck Protection Program. And under this program, the SBA is guaranteeing 100% of the loans. So typically under this 7A program, if you remember, the PPP is kind of just code name for this extended 7A loan program that was created under this CARES Act. And normal 7A loans are guaranteed only 85%, meaning the bank is taking 15% of the face value of that loan. They're taking on that risk, right? They don't get underwriting from the SBA. And normally it would go only to 150,000. So what we do have is that now lenders are able to make these 7A loans, and there's some changes to the program that make them particularly appealing, especially to businesses like the ones that we have in our industry. Let's see if there's anything here. The key thing to note here, I noticed in the polls that more than 2/3 of the attendees that filled out the polls here, and that's a pretty significant number of people, have not filled out their PPP application. And I'm going to hopefully inspire you to go ahead and do that. It is first come, first served. You'll see even now, they just passed legislation, I believe, in the Senate that would add another $250 billion to this program because they're concerned about funds running out. So suffice it to say, it's first come, first served. Get in line today if you can. There's a lot of confusion out there about this, and hopefully you'll be well empowered to go ahead and get the benefit of this program by the end of this presentation today. So who's eligible for these loans? So really the key thing to know is if you've got less than 500 W-2 employees, this includes full-time and part-time, okay? And they only count employees that live in the US, okay? So you have to have employees. If you have 0 employees, meaning you're either a sole proprietor or you're a corporation that doesn't make a payroll, or you're a corporation that only pays people through 1099s, you as a corporation will not qualify under this program. I'm going to come back to you as an individual because there is a good chance that you qualify as an individual, and I'm going to talk about how that goes for individuals in just a moment. So there is also a chance if you have more than 500 employees, depending on your industry code. It's mainly around hospitality and food service, so probably this isn't something that's going to apply in our industry. But maybe something that you could talk to your customers about if you have, I know many brokers work in hospitality and food service in particular. And for your larger customers, something that you might be able to share with them. Make sure that they're availing themselves of this program. Okay, so in order, next thing on eligibilities, we talked about number of employees. We talked about they have to be W-2, full-time and part-time, got to be less than 500. They have to live in the US. Okay, next thing, you have to have been in business on February 15th. I think it's a safe bet. Everybody on this call was in business, a month and a half ago. And you had to have employees for whom you paid salaries. So independent contractors do not count. So if you issue someone a 1099, or if you should have and you didn't, you cannot go back and count them under this program. Again, I'm going to talk about what they might be able to do as individuals, but you as a company will not be able to count that as payroll. So let's talk about ineligibility. Now, this is all in green. This stuff all came out in that IFR last week. So this is newer information. So obviously, if you're engaging in illegal activity, I'm sorry to tell you, you cannot borrow money from the federal government. If you have nannies or housekeepers, even though under IRS rules you are an employer, that does not count as payroll under this program. If you've been incarcerated on probation the last 5 years, I think there are probably a couple out there in this industry who fall into this category. So I did want to leave this in. Definitely something to check on. Might want to speak to someone more qualified than I am as to where you fall in that qualification or disqualification. Probably a banker would be your best bet. And if you already have any loans or you're delinquent, on those loans, or you've had issues in the past with lending from the federal government, that's going to be a real issue for you. And the last thing, it's not on this slide, but anecdotally, I'll tell you, if you're not in good standing in the states where you do business, and I mean your statewide standing, let's say you didn't pay your property taxes, or you didn't file your state unemployment taxes, or you failed to make an annual filing, particularly for tax or anything that might affect your business charter, that's going to keep you out of this program. A lot of states are fast tracking businesses who want to kind of clean up their status. I have one friend who is doing that in a state right now because she found out she cannot participate in this program because she missed a franchise tax payment in a particular state. And, paperwork thing, change of address, something like that. And now she's encumbered on a very large financial, critical piece in her business. So if you are not in good standing in your states of operation, that's something to definitely check on. A couple of other things. This has to do with affiliates. So if you're affiliated with a parent company, and the parent company, either by control or majority ownership, would make you taken together not qualify. This is something that's still a bit of a gray area. I don't think most brokerages and suppliers fall under this. It could be that some suppliers do who are part of a roll-up or owned by a larger parent company. And I'll leave that to them and their attorneys and bankers to sort that out. I'm really going to focus on the small business stuff here. So let's say that you do qualify under those stipulations. Now let's talk about what's the application process look like. So the first thing that the CARES Act did as far as the application process is, you can make a good faith certification. So bankers are now allowed to rely on whatever they deem an appropriate amount of proof for them to submit you for approval. Now, I'm going to just put a footnote here and say, number one, this is going to vary from bank to bank. And number two, this doesn't mean that if they submit you and it's 100% guaranteed that it's risk-free. It's only 100% guaranteed if they've made sort of this same good faith effort to certify you. So they're kind of riding on their backstop. Let's say you take the money and run and don't pay it back and it's not forgiven. They're going to be on the hook to pay that money back to the federal government if they can't prove that they put you through at least a good faith effort to prove that these claims you're making are valid. And I'll share with you a little bit in just a moment what my experience has been with two different banks going through that process. So key things that you have to self-certify on. Number one is that you're affected and the loan is necessary to support your ongoing operations. I think this is a pretty safe and easy one, but just realize that, if you're still moving high and to the right later when it comes to forgiveness on this loan, you may not get fully forgiven. So just something to keep in mind there. The funds have to be used to retain workers or maintain payroll. You can also use them to make certain mortgage payments, not all mortgage payments, certain lease payments. You have to be under an active lease, and it has to be a lease that was executed prior to, I think, February 15th. And you can make certain utility payments. I'll talk about what those might be. So that's the application process. Again, it's still fairly high level. But let's talk about the next aspect of this program, which is how much can you borrow? So the maximum loan amount period is $10 million under this program. But the way that your loan amount will be calculated is 2.5 times your average monthly payroll costs. I'm going to walk you through how that actually plays out, what counts as monthly payroll costs, and how those will be calculated by your bank if you haven't done this application process yet. And in the case, I didn't see anyone who had received their EIDL advance yet. But in the case that you have, that will be debited from the amount that you qualify for in this program. I'll touch back on that when I cover the EIDL program in just a moment. Okay, so now we covered who qualifies, how you apply, how much you can get, and now let's talk about, once you have the money, how can you use this money? So like all loans, loans come with a set of rules around them. The bank's not loaning you money that you can then take to Vegas or buy a car with or anything like that, right? You can only use certain loans for certain things. So under this loan, here's what you can use this money for. You can use it to pay salaries, wages, and commissions. So whether you pay your people hourly or salaried, so long as they're W-2, including commission payments, which is a big part of our industry, so long as they're W-2, you can use those to pay your employees. If employees go on vacation or take leave, you can also use the money to pay them while they're on leave. Now, there are some caveats to that because of some of the special leave programs that have been enacted, particularly around kind of the self-quarantine rule. If they're getting funded through that mechanism, obviously you can't double dip. So you can't pay them out of this one and pay them out of that one. So it'd be one or the other. Another thing you can use it for is to maintain your health care. So we have a group health insurance plan. I'm sure many of you do. You can use this to pay your premiums on that health insurance program. And then next is retirement benefits. I own a company that has a 401k program that's sponsored by the company, and the company makes contributions every month. So you can use this money to maintain those retirement contributions going forward. Now, in some states and some localities, the employer pays a special tax on top of someone's salary, but it's taxed based on the total amount of salaries that you pay as a business. In those cases, you can count and use the funds to pay those taxes. Now, I will say that this does not include FICA and Medicare. So we're not talking about federal taxes here. And so far as I've seen, this is not an unemployment insurance. This is for state and local taxes only in states and municipalities that charge an employer-based tax that's based on their payroll amount. So something to look into. Again, if you want further detail there, you're going to need to speak to a local accountant who understands your municipality and state tax rules. Now, you can't just pay someone any amount of money. You can pay payroll up to $100,000 in annual salary, and this is going to be prorated for the covered period. Now, currently that's defined as February 15th to June 30th. I think there's some expectation that this will be revised as the funds actually start to roll out. They may shift this window in time. So just keep an eye out for that. Now, this is where I'm going to take a little bit of a sidebar. There are some brokers in our space, no suppliers that I know of, but some brokers who act as sole proprietors or independent contractors. As well, there are many brokers who employ people as contract earners, not under a W-2 tax structure. And the challenge is, I'm sure you heard earlier, that you as an employer, as a contract employer, are not allowed to claim those funds under your loan amount, nor are you allowed to use the proceeds from the loan to pay your independent contractors. What you can do as an independent contractor, or have your agents do, as they are independent contractors. And so just to be explicit, there was a question about a business that has no employees but doesn't operate as an independent contractor. You, as the owner of that business, have self-employment income, and that self-employment income also qualifies here. So that would be effectively a sole proprietor. This doesn't mean that your business is organized as a sole proprietor. It means you have self-employment income. That is also included here. So you, as the owner of the business, can file for your pro rata share here of self-employment income, so long as you can document that and show that you've claimed that in 2019. So again, certain taxes you can't pay, particularly FICA and Medicare. Collection of income tax, again, being paid by the employee, you're not allowed to do that. And your share of income tax that would have been paid, you can't collect. If you've got employees living outside the U.S., you cannot collect or use funds to pay them. We have employees living outside the U.S., so they're excluded from our program. And again, as I said, you can't double dip on the qualified sick and family leave wages.
I'm sorry, real quick, this is a great time to just make sure that anybody who wants to ask questions, please, at the bottom of the slides underneath where we're presenting, you have questions, you can log questions, and we'll continue to try to answer those as Nate continues to present. So might be a great time if you have questions about your individual business to start logging those questions now. Thanks, Nate, please.
Yeah, please. And when we hit the Q&A at the end, I'm going to circle back and we'll try to hit every question that I didn't already cover, through in that Q&A period. So I just want to make it, simple. When you apply to a bank, for those of you who've not done this, you're going to get a spreadsheet. Again, I've done it under 2 banks now, The first bank that we went to is our normal bank, is a community bank. They only had $250 million to lend. Now, this is their capital that they're lending. There was not a clear financing vehicle behind that. There is no official limit from the SBA placed on any given bank, but until they have clear underwriting, they're not going to lend more than they're comfortable with. So anyway, our bank was loaning $250 million. Before they processed, we submitted our application on last Friday, so almost a week ago. Before they got through the Friday applications, they had 1,700 applications at $270 million. And they told us, we can submit you, but we can't promise that we're going to be able to lend to you. And they encouraged us to basically try another bank. So unfortunately, we had to go and resubmit at another bank. Still went with a top 50 bank, but not a top 5 bank, and have been successful in getting through that program with them. So been able to go the distance with 2 different banks, and I'll just tell you that they all have basically very similar forms. They're going to send you some kind of spreadsheet, maybe some certifications in a Word doc. They're going to want to know a lot about your ownership. If you're owned by a company, who are the owners in that company and the owners in that company? Basically trace it back until you hit individuals, so they understand who the beneficial owners are going to be. And then they're going to want to know about these numbers. Number one, they're going to take your 2019 payroll. They're going to ask you for your 941. So the form you file at the end of the year with the IRS that says, here's the all wages paid for the year, that foots out to your W-2s that you issue your employees. That's the form that you're going to need to turn in to prove your 2019 annual payroll. Then you're going to need to get a report of payroll by employee for 2019, and any employee whose salary, now I mean, this all cash compensation, so salary, commission, hourly wages, etc., bonus, right? Any of that compensation is greater than 100K, you're going to need to debit your total 2019 payroll for every amount for every employee that made over 100 grand. So if you got one person at 120, somebody else at 150, you're going to take 20 plus 50, that's 70. You're going to subtract 70 grand from your annual 2019 payroll. Next, you're going to take your health insurance premiums. They're going to take your annual health insurance premiums. Mine, both banks said, okay, come in and show us a report showing all the different payments you made to the different healthcare providers, health insurance providers, so we can validate your premium amount. So we submitted them that detailed report. And then they're going to want to know, okay, how much did you contribute to the retirement? And this is employer contributions, so not debits out of people's paychecks, which again would already be accommodated under their salaries. So we proved here's where we're making 401k contributions. If you make, it doesn't have to be a 401k, it could be an IRA, a SEP, simple, various different retirement vehicles that the employer makes contributions to. Again, you can include that here. Then you total those up. One interesting thing is that the 100 grand limit is only to salary. It does not include that 100 grand or greater than 100 grand employees, health insurance, or their retirement amount. Those are over and above the 100, so you don't have to debit those out. The debit comes before that. Okay, you get that total. You divide by 12 to give you a monthly, right? You multiply by 2.5, and that is your loan amount. So that is your requested loan amount that you're asking to be approved for. Okay, I know that that's a lot of information, but we got to keep moving because unfortunately it's just a detailed program. So let's talk about, now you get the loan. So we've gone through who qualifies, what's the application process, how much can you get, how is that calculated, and now let's talk about, let's assuming you get this loan, what can you use the funds from this loan to do? Okay, earlier I said you can make certain mortgage payments. You can make the interest portion on mortgage payments out of these funds. It's not that you can't pay your mortgage. If you own a building, only the funds can be used to pay the interest portion. In other words, they're not going to pay down your equity in this asset, but they will cover your holding costs on that equity. You can pay rent. Again, it can't be rent to yourself. There's some other stipulations, but you can pay rent under a qualifying lease that was executed prior to February 15th. And you can pay utilities. Utilities are, we know better than anybody, certainly gas and power, water. but it looks like internet and telephone might be included. I don't know whether they're going to accept cell phone expenses, but I'm hopeful that that will come out, in the coming weeks before the forgiveness process. The one key thing to remember is no matter what you spend it on, 75% of the loan amount must be used for payroll costs. Okay, so you can't borrow it based on your payroll, let everybody go, and then put it in the bank and just say, well, maybe it won't be forgiven. I'll just, use it to save for a rainy day. So it must be used for payroll, 75%, and the other 25 can be used in those other categories. So let's talk about the terms of the loan. So we now talked about the what you can use it for. So I've been calling this a loan. Many people are calling it a grant, but let's talk about why it's a loan and then what happens in the future. So originally the bill said the interest rate had to be under 4%. The IFR came out and said, okay, the interest rate's actually going to be 1%. The maturity said it had to be less than 10 years. The IFR said the maturity is going to be 2 years. So maturity on a loan is when you have to pay it back. Couple of key things. Number one, waiver of personal guarantee. Normal 7A loans require a personal guarantee over a certain amount. In this case, personal guarantees are waived because the loan is 100% underwritten by the federal government. However, if you misuse the funds, you will be held personally liable with or without a personal guarantee. So that's a key thing to know, is to be able to measure and report on how you're using those funds. Next, no collateral. You don't have to post any collateral. No liens are taken. Normal, if you've ever had an SBA loan, they pretty much lien like everything in your life. And they will maintain that lien until the debt is paid for. In this case, there's no collateral required and no prepayment penalties on a 2-year note. I'm sure that's not a big deal. And again, maturity of 2 years. One other thing, this is about lenders. I think I touched on this earlier, but normally they require, the SBA says, hey, lender, you have to provide us with this set of documentation in order to lend under this program. In this case, they're allowing them to more or less self-certify, and that's allowing you to self-certify, the whole goal of which is compressing the timeline to apply, get approved, and get funded. And they're doing this by also taking on 100% of the risk. Again, setting those exceptional cases of fraud and so forth, misuse of funds that I already described. So that's just a key thing to know, that you don't need to go pay a consultant to help you go through this process. There's a bunch of profiteering going on. We'll help you get the PPP funds. You don't need to pay anyone, and you don't need to even be all that sophisticated. You just need to find a banker who will work with you. And if you've got QuickBooks, pretty much anything, QuickBooks and some payroll records, some basic tax filings, particularly your 941 for last year, that should be enough. And I keep saying 941. I think I mean the 940, the annual filing. So next thing to know is deferment of the loan. So the key takeaway here is that, you had to state that you were impacted. They've gone ahead and said, like, anyone who was in business on February 15th, we're just going to accept that you were impacted, right? And you're not going to have to make a payment. In fact, the lender cannot require you to make a payment on this loan for at least 6 months, okay? There's more guidance coming on what the payback process will be. Now, this is kind of the juiciest portion here, which is loan forgiveness. So far we've talked about this as a loan, and it is a loan, meaning if you don't meet certain criteria, you will have to pay some or even potentially all of it back. Here's how you can actually get the loan forgiven. And the other kicker is that, well, let me get to that. So during the first 8 weeks after you get the loan, you have to spend it on the things we talked about: payroll costs, interest on your mortgage, if you have one, rent, and utilities, okay? Notice telephone and internet. You can't go out and sign up for an internet service if you didn't already have it. You can't go get a gas bill or electricity bill or a mortgage or a lease. Again, you can't go create new expenses and then pay for them under this program. They have to be pre-existing expense streams. There are going to be some more guidance on regulations. I mentioned cell phones and some other things that are coming. The key is, though, the entire amount of the loan can be forgiven. Okay? And remember that contractors do not count here. Let's say you laid some people off. You know, I know there's some business out there that have really been proactive about conserving their cash. And in the event that you have, and this loan funds, you can bring them back and pay them under the loan and get forgiveness, even though you laid them off, so long as they were laid off or salaries were reduced between February 15th and April 26th. Okay? So if you made some early calls in your staff to cut salaries, to cut headcount, you can bring those people back and readjust their salaries and pay for them out of this loan and have that 100% forgiven. The biggest kicker of anything here is that the forgiven loan will not be counted as income. So normally, when a loan is forgiven, the lender writing it off takes it as an expense rather than a sort of receivable, rather than an asset. They write down the asset and take the expense on their balance sheet. And the other party is supposed to write down their payable on the loan and record income. In this case, you get to write down the payable, meaning you don't owe the money back, and not show any taxable income. So this, folks, is called free money. And now you understand why the lines for this program are so long. It is because this is effectively free money to pay your people, to pay your critical expenses, and to stay in business.
And Nate, there's a lot of questions coming in right now, really focused around the 1099s. And to my knowledge, and just to make sure that I understand this correctly, and so do our constituents, that 1099s can apply for their own PPP starting tomorrow. They apply directly, but the employer is not the one that would be filing for those loans, correct? That would be individual people that have to file tomorrow?
Correct. Thanks for the clarification. Yeah, that's what I was trying to communicate earlier, which is they're going to need to file themselves as individuals. So they're going to say, hey, I am an independent contractor, and I want to file basically to pay myself my lost self-employment income. So long as they can demonstrate through their income tax filings that they have indeed a history of income, they can get up to 100 grand in annualized compensation. So 100 grand divided by 12 times 2.5, right? That would be their maximum loan amount. And they can use 75% of that to pay themselves. And they can use the other 25% to pay their phone bill, their power bill, their anything that they show as an expense under contract.
Absolutely. No, Nate, really appreciate that. I know a lot of folks on the line, especially brokers out there, do have a lot of 1099s. So we're answering these three questions here that, you know, the SBA and the PPP programs or EIDL as well are really for those companies that have W-2s. Those folks that are 1099 based, our suggestion would be to research the program that 1099s can use starting tomorrow and really educate your folks on that program itself. Because they'll have to do that individually and probably have a lot of steps to take in that as well. So thanks, Nate. Please continue.
Yeah. So I covered this. These slides are mainly in here as part of the handout. We're going to give you guys these slides. Basically did several different scenario walkthroughs. Let's say an employer had this many employees making this much. Then they did a layoff, they hired the people back, or they adjusted their salary. What would be their loan amount? If they paid it, how much would be forgiven? So gamed out a couple of examples for you guys. Again, I'll leave that in the handout. The loan forgiveness process, basically down the road, you're going to go and ask to be forgiven on this loan. and it is the lender's discretion whether or not you've justified forgiveness. So it's important you don't treat this like free money, but the program is intended to be very low risk capital, if any at all. And again, to get employees not going on to unemployment, staying employed in their place of business rather than filing for unemployment. Okay. Again, you cannot include 1099 miscellaneous income. Oh, this would be, this is what they would show if they're a sole proprietorship or an independent contractor. They would submit these forms. I mentioned that already. You can e-sign everything, so it's very quick to actually produce all the documents. You basically, as long as there's one authorized representative, you can certify for the whole business. Obviously, if you make false statements, you can go to jail, big fines, and I included a link to the actual PPP application form. I would recommend sending this to your 1099 contractors just to kind of help them say, hey guys, here's how we're going to help you take care of you guys. You know, we're going to help you walk through this process. And if you need help on that, I'll just put it out there that we'll definitely answer questions. If we need to have like an online workshop where we sit for an hour and walk through the application, and let everybody's 1099s sign into that, that'd be a good service. Just let us know. I'd be willing to do that to help out all the independent brokers out there. Okay, so I mentioned that you can't double dip. So if you applied for the EIDL and the PPP and you're approved for both, there is some overlap potentially. And I'm just going to explain what that is really quick. So just to wrap up here again, the other kind of key piece. So maybe the sort of, if it was 80% PPP, it's maybe another 15% EIDL and 5% kind of tax relief, which I already covered. So I'm just going to hit the EIDL piece because I think it might be interesting to some. Number one, again, got to have less than 500 employees, but even sole proprietors, independent contractors can apply for this. It has to be a disaster, but what do you know? We have a disaster in all 50 states, so that you can check that box. You can waive the personal guarantee up to 200 grand. So that's an expansion of the program. Normally you would have to personally guarantee at a number lower than 200. And you can be a new business so long as you're operating by January 31st this year. And normally to get this disaster program, you have to state that you were unable to obtain credit anywhere else. Again, they've waived that that requirement. Okay, so the key thing here is, whereas there's $350 billion in PPP, okay, there's $10 billion appropriated for the EIDL. All right, and eligible companies can ask for up to 10 grand of their EIDL to be advanced to them as an emergency grant, which is again, this 10 grand is a grant and has to be used again to pay these key things. Under the EIDL 10 grand grant, it is actually not a loan. So it's just a grant and it's thought of as an advance while they're processing your loan and determining how much EIDL loan they will actually provide you. So there's an application and you can go to do that. I have a link to that at the end of the presentation. Okay. The EIDL application, by the way, this is lended by the SBA, not by a bank. You actually apply for the PPP at a bank and the EIDL at the SBA. So there's an SBA website, has a link, you fill out the EIDL. This came out yesterday that the $10,000 grant is not a blanket 10 grand because of the high demand. They decided to scale it down where you're going to get $1,000 per employee. So part of the application, you say how many employees you had at the end of 2019, I believe, and you'll get up to 10 grand metered out at $1,000 per employee. Okay. The other big update is that the Federal Reserve came out, I think today, this morning, and announced a Main Street lending program. And this might be something more for either large shops or suppliers, but it's between $1 and $25 million in loan. It's capped at 4 times EBIT. So if you've got your earnings calculated, net of taxes, depreciation, amortization, interest, so forth, up to 4x of that, you can be borrowed under this program. The interest rates are 1/100th of 1%, which is the current Fed's overnight financing rate, effectively zero, plus 250 to 400 basis points. So 2.5 to 4% interest on 4 times EBIT on a 4-year maturity. If you're a big company, that's about as close to free money as you're going to get. So another very attractive financing vehicle that's out there. I wanted to include in the presentation. Okay, so now what do? The first thing is, if you're not already in touch with your banker, you need to be. And if you say, well, I don't have a banker, I just have deposits, you need to call the bank and find out who's running their PPP program, okay? You've got kind of 3 options here. Big banks can lend more, but they're kind of slower to move. In fact, Wells Fargo doesn't even have an online application yet. They were kind of slow to move. They thought they might be encumbered because of their past lending indiscretions. If you remember, they were discriminating against minorities and some of their lending activities for mortgages, and had some other charging fees on accounts to people without necessarily notifying them explicitly, doing some sneaky stuff. So that's why they're kind of behind the curve. Bank of America is out there, Chase, so forth, some of the big bigs. I know Bank of America is already processing applications. I have some friends who already have ETRAN numbers. ETRAN, ETRAN, that is effectively your loan approval from the SBAs. Once you have that number, you're getting money. It's not an immediate funding, but you are in process of getting funded. Community banks, they can lend less, but they probably will pick up their phone. Don't expect to call Bank of America and talk to someone on the phone who is going to review your loan. Okay, you're gonna have to go through the website and wait. And the third option is kind of a wild card. Cabbage and Lendio are 2. These are these online lenders. Some banks are actually outsourcing their loan processing to them. There's one community bank here in Houston that's outsourcing its lending to Lendio on a white labeled kind of deal. They've kind of said, yes, we're going to lend, and a couple have come back and said, no, actually we can't. And then they say, oh, wait, yes, we are. This is kind of risky, but if you don't feel comfortable with a traditional bank and you kind of want to go online, this is a play that you could potentially make here. Just remember that banks are not making much money on these loans. There's no fee associated. And I think they're making some like very, very minor spread, being paid an underwriting fee, effectively just covering their cost of labor. So they're basically doing you a favor, meaning they're putting their existing customers who actually borrow from them and pay, bank fees and interest and so forth, at the front of the line. It's not surprising, but it's just something you need to be aware of. So if you've got a friend that has a big banking relationship, I'd highly recommend you reach out to them and say, hey, would you introduce me to your banker, and ask them to do business with me. And other key takeaway is, if you are doing that, you're likely going to have to move your banking relationship. Again, banks don't really have a way to monetize this very well. And so they're going to be looking for people to provide them some sort of revenue stream other than just being kind of a loan pass-through. Okay. Last, as Jason already mentioned, unfortunately, Madeline was not able to join us today due to her internet not being functional, and we miss her. I think it actually may have worked out because I took the whole time. I took a little more time than I would have. We've been trying to share. So with that, I'll just move to Q&A.
Awesome. Yeah, I really appreciate that. So Nate, a lot of great questions here. Let's start off with the first one is, how are you expected to prove that your receipts were decreased due to COVID in order to get forgiveness? Or do you have to actually prove that your receipts were due?
I think the prevailing wisdom here is proving that you were affected is going to be more of a box check than let's just say it's informal for now and it's between you and the bank. I think that's kind of the key thing to understand, is that Your bank is going to determine that, and that's a question you're going to want to ask your banker. Remember, it's at the bank's discretion on the forgiveness. So you're actually going to ask the bank to forgive your loan. If they feel good, they have 100% coverage, but you need to make the bank feel good. So that's kind of the key takeaway. Christian.
Awesome. Really appreciate that. The next one up here is is a broker and they're paid monthly. Sorry?
Kirk, I'm just reading Kirk's question here. You get paid by clients. No,
So yeah,
there's not really a loss calculation here. Again, I think if you can show that you were somehow encumbered, had to idle staff. I'm not a banker, so I can't tell you what your bank is going to expect. It's just something I would ask your banker. Hey, later in the forgiveness stage, what sort of injury are you going to want to see, or is it just a self-certification? Because the SBA has said they can rely on self-certification, saying, "Hey, I was affected." I think the prevailing sentiment is that pretty much everyone is affected, and this isn't going to be a particularly high hurdle. They're not trying to make it a high hurdle. They're trying to keep people employed and not go on unemployment. Let's just recognize, here's one thing I didn't mention, but the kicker to the why they don't want you going on unemployment is because unemployment right now for whatever the minimum is, I think it's 10 weeks, 12 weeks. If you make, I think the break even is about 55 grand. If you make 55 grand, or less, you'd be better off on unemployment than staying employed. Okay, with that extra $600 a week that the CARES Act added to the unemployment insurance programs. So that's something to keep in mind. I know some people who encourage their employees to go file for unemployment because I have a friend that runs a bounce house company. No moms are renting bounce houses right now, and so all his delivery crews, he's got like 60 guys. He said, "Hey, you get more money from the federal government." And he just kept his managers, and he's actually hoping they won't quit because some of them don't make 55 grand. So it's something you're going to have to keep in mind there. But that's really what they're trying to do is keep people employed with their current employers. So Chris Doobie, what if the reduction in energy usage is so substantial that we cannot sustain payroll for the initial 8-week period and are forced to lay off again? Well, for the 8-week period, you have basically 100% coverage, right? They're going to fund whatever your payroll was prior to. And when that funds, you can use that to pay people, restore them. And the gamble here is that, hopefully the economy comes back during that 2-month period once you get funded. So the 8-week period starts when you can use the funds for forgiveness once the loan funds. So, and when I say funds, once the money is deposited in your account, that's funding. Okay, Bobby Schiff says, if you've got only contract people, can you still be eligible for the grant if you're paying draws? I've had several friends in this situation, or some that have a mixed bag of W-2s and sort of 1099 draws. It's my opinion that 1099s are not going to be covered through their contract employer because it just opens up a huge can of worms. Like some people 1099 their attorney. So now I can pay my attorney on the payroll, like with the federal government, 1099 their accountant, their IT guy. So now I'm paying all these guys, so if I pay my accountant and I don't 1099 him, that means I can't deduct it. It's just very difficult once the government gets into these. That's kind of the ideology behind it. I'm not saying that it's fair, but it's an easy line to draw. The key thing is to help all of those folks, get out there and apply for their own funds.
And so, Nate, if I may, because Brian Erb and John Holmes asked a very similar question. To sum this up, it would be that if you're a sole owner of a brokerage and you yourself are an employee and taking a salary under $100,000, there may be some programs within SBA and PPP that you can apply for. And if not,
they're not covering, like if you're an S Corp and you're taking partner draws as your comp. I would just caution you to talk to your CPA about that. IRS has minimums if you're an operating partner. and taxed as a
Right.
partnership, that you're not taking salary. Hopefully this might be another kick in the pants where you say, God, I might just pay myself a W-2 salary if, 50,
Right.
60 a year, whatever. Yeah, owner's draws on an S Corp. Now, there are some special cases, like an attorney is a PLC where their partner draws are taxed as W-2 comp, even though it's not technically salary. I don't. That's a very technical question. I'm going to have to defer to the accountants on that.
Yeah, absolutely. And I would say that just to, again, wrap it, so as far, there's not a lot, right, for those that are 1099 sole proprietors, but what we are suggesting is that they
You're
look
sole owner. You file as you, not as your business. So if I'm Nate Richards and I own Nate's Energy, and I got 4 contract sales guys that are just 1099, they all sell for me, and I have self-employment income. Instead of Nate's Energy LLC, which has no payroll, I file as Nate Richards with my social security number, not my employer identification number, as my tax ID. And I say, hey, I have this demonstrable self-employment income from 2019, and I borrow that.
Right. Okay, great. So again, we're suggesting that people look into the 1099 program, where individual 1099s will be able to start applying tomorrow for federal grants, but that will not be through the employer. It'll be through the employer encouraging their 1099s to look into this specific program that rolls out tomorrow. Correct?
Correct for your agents. And if you, as a sole owner or a partner owner, where you're not paid a salary, you just take self-employment income, meaning the income of the business is taxed to you as self-employment income, you would be filing a 1040 ES, be making estimated tax payments against that. That's how you would know. Then you file as you, at the individual, as
Right.
opposed to your business, under the same thing, just the same program as your agents.
Absolutely. So another question that's right in line with this is the most recent one from Joe Vesey about, if you are a sole proprietor and you do have ability to apply for the EIDL and the PPP as a business, can you also apply for unemployment as a sole proprietor at the same time?
You will not be able to collect unemployment and pay yourself a wage at the same time, whether you pay yourself out of idle funds or PPP funds. You definitely cannot fund your own, or frankly, any employee, whether it's you or any employee. You're going to be paid on a W-2, so you're going to report these wages, and you can't use these funds to pay someone who's also collecting unemployment. I think that's going to be a blanket thing for all unemployment. Is if you're on unemployment, you're not getting wages. The moment you get a wage, you have to inform and stop collecting unemployment. So
Right.
no, you can't do both and. You can do both and, but not at the same time. That's right. What I'm.
That's great. No, really helpful for that. By the way, I do believe that this webinar session should be will be ending and kicking us out in about 7 minutes. So we do have a couple more questions to answer, and we'll be wrapping this up. But is the new Main Street lending provided by my bank or the SBA?
This is actually a program of the Federal Reserve that was announced, not the SBA. So, and it's literally just being unveiled this morning. So I would say, do some Google searching, check it out. I literally, the press release had like 3 paragraphs in it. So I think there'll be a lot more to come on this. The government's doing everything it can to calm markets. And so, talking to everybody, saying, hey, there's going to be capital for you to make it, is kind of how they do that. And so it might still be months before this comes to fruition. But the Federal Reserve has said that this is a $3 trillion program. I don't know if I put that on the slide or not, but I don't know. My guess is it will be through the bank, because it won't.
Gotcha. No, and I can assure everybody that Nate's been incredibly on top of this for Power Matrix, and so as more information comes about that, maybe there might be another webinar coming. So stay tuned. Sure. We do have Laura Sherman asking about, can you reiterate the double dipping So the double dipping that you spoke about and how you can't do that.
There's a couple of them, but you can't, if you get the advance under the EIDL, whatever you get, let's say you had 10 employees and you got the 10 grand, that 10 grand is going to debit from the amount of PPP you would qualify for. So let's say your PPP was, let's see, those 10 employees each made, 60 grand a year. So that's 50 grand in monthly salary, right? And let's say that you get 2.5 times that. So it's 125 grand. You would lose, you would actually fund for 115 because they said, well, you already got 10 of it under the EIDL advance grant. So that's one form of double dipping that you can't do. The other thing is, again, collecting, let's say someone goes on leave under the COVID extended family leave stuff, where like if I self-quarantine or I have to care for a kid, I can take effectively what amounts to FMLA, and the government will cover half my salary for like up to 12 weeks. You can't pay them that under that program and then also claim all their wages for loan forgiveness.
Mm-hmm, mm-hmm. Cool. Thanks so much. That's really helpful. Last two questions here. John has asked if he's part of a small company, but they're under the umbrella of a very large company, which several of our brokerage firms are. You mentioned the PPP and Main Street lending could apply to large companies. What's the best way to go about it to see if the small company under the umbrella of a large company qualifies?
Yeah, again, I would say that the Main Street lending facility, again, is brand new. Came out this morning. I just added that slide from a press release that came out. It's a program of the Federal Reserve. So I don't know much about that, except, again, they're low interest loans that are going to be lended on based on earnings, so profitability, and from between $1 and $25 million on a 4-year term with between 2.5% and roughly 4% interest. So again, it's a big company, pretty close to free money. It's at least half price money. So the PPP, again, you're gonna have to look at the affiliate rules. If you have either through a financial controlling interest or by shared ownership, or there are a number of different ways that you can be an affiliate. Both banks require me to produce all affiliates. So every company that I own, that whether it has employees or not, and any company that if I have a partner in that company, any company they own, and any company that is owned by that company. So basically all sort of business connections, and to document that by operating agreements. So I had to produce operating agreements that showed the actual percent ownerships. And I had to produce them until we got down to a set of individuals, right? Individual people. So as opposed to, well, it's owned by this other company. And then each of those companies are going to want to know, well, how many employees are they? And right, and what's their industry classification? So if you're owned by a casino, you won't be able to do that. Just using a ludicrous example. So you're going to have to work with your parent company to see. But if they have more than 500 employees and they're not in hospitality, likely you will not qualify for the PPP.
So that would then be kind of like stay tuned for the Main Street lending.
Yes.
Cool. All right, great. Last question here, and then we're going to take next steps to wrap this up as people start to move on to other meetings as well. So as a sole proprietor from Clarence Robinson, dear friend and customer of ours, should he file with the SS or business ID?
What's hey, Clarence, I don't know, man. You might have been DQ'd under one of those regulations. No, in fact, I would suggest if you don't have, even if you, okay, if you take if you take self-employment income, then you should be filing with your social, right? As Clarence Robinson, right? Not as your business.
And that's not under, sorry, that's not under the EIDL or the PPP. This is in the 1099.
As you, the individual, because you are actually the person borrowing, and you want the qualifications applied to you as an individual. Again, the key thing you're going to want to have is last year's, probably your 1040, showing the self-employment income that you paid, self-employment tax on. That's going to be the best way to document that.
Super awesome. That was Todd Wilkes' question as well. So cool. All right. So yeah, just to address I'm going to take over. Nate, thank you so much, man. I really do appreciate you've been fantastic, man. What great questions answered. And we're going to continue this journey as Power Matrix to continue to provide our audience here with fantastic content. I know several people have joined this call to hear our dear friend, Madeline Kuchera from EarthEtch present, and due to technology and internet issues, she was not able to do so. Having said that, she has surely given some great collateral here and information via this PowerPoint. And we'll be following up for all attendees with an email, so stay tuned with how to access both the recording of this session as well as the different slide decks via PDF that both Madeline and Nate have put together. Ton of great information in here. EarthEtch is a company that really focuses on regulatory and compliance and helping and training and helping brokers and suppliers really understand the information that is coming out from the PUCs. So we look forward to future webinars, maybe with them as well, but we will surely send out those slides. Thank you, Elizabeth, for that question. And as far as the recording as well, that is going to be available via this email. So stay tuned, follow us on social. We are going to be having this next webinar. I think is going to be incredibly topical next Thursday at 9:30. This is our time slot. It'll be the same every week. So just plan on attending or seeing the webinar afterwards if you can. Suppliers, again, are going to be our focus, and we get a lot of hard-hitting questions. So don't be afraid to send me an email, reach out personally, LinkedIn and or email. And I'm more than happy to get those on the agenda and moderate that panel with the suppliers. Very excited for that. So with that, thank you for your thanks. By the way, guys, honestly, every every reshare of our webinar series, every comment that you guys make to us personally, this is the fuel for us to continue to do this. So please continue to share. We want to get this content out to as many people during this time as possible. And continue our mission to connect people through technology to build trust in retail energy markets, all band together here to make this industry better. So thanks for your participation. And with that, I bid you adieu. Thank you. Appreciate it very much. Nate, thank you very much again for all your time and effort into this.
Absolutely. Thanks. Take care, everybody. Stay safe.